Your market news now. Stocks in Asia fell as U.S. equities dropped for a second day and as investors began to adjust for the prospect of higher interest rates as the Federal Reserve battles inflation. At the start of the week, investors had cheered for Fed Chair Jerome Powell, refraining from striking a more hawkish posture after a much stronger than expected jobs report at the end of last week. Looking at mainland Chinese blue chips, they lost about 0.4%, and the Hang Seng Index tumbling 1.1%. China's January factory gate prices, they fell more than economists had expected, suggesting that the flashes of domestic demand that had stoked consumer prices after the zero COVID policy ended are not yet strong enough, to rekindle upstream sectors. To talk to us about the market dynamics, we are joined by Roy Mutuni, who is a portfolio manager at Sanlam Investments. Roy, thank you so much for your time. In an environment where we're still trying to assess the Federal Reserve's next policy moves, how are you assessing global market sentiment right now?
Well, it's actually turning quite negative, I would say, and it's on the basis of actually thinking about where interest rates could go, where the peak in the interest rate cycle is, and also a lot of disappointments around the tech sector. And you've seen all the news around Google, Meta, Microsoft, and all of that. So overall, I would say a bearish mood is setting into the markets. Commodities are not rallying. They look like they peaked and they've started coming off. And there's very little positive sentiment out there that could move markets higher than they are right now.
Speaking of sentiment, depending on which analyst you follow on social media, not quite a lot were impressed with the State of the Nation address delivered last night. How's the Rand reacting to some of those comments from the president's speech?
It doesn't seem to be reacting. I mean, it's marginally weaker, but I would say that's more to do with where the direction that the dollar has taken. I would say, I mean, just putting my voice into it, I think all I saw there was a little bit more complexity in terms of decision making and where the solution's actually going to come out. I mean, and concentrating on all of this power in the president's office just makes things very unclear. We don't have much detail yet. Maybe it will become clearer when the detail comes out, but I would tend to agree with you. It's not been received particularly positively as of now, but it's more a wait and see. Let's see where the detail is. Let's see how the execution comes through, and then let's update our views then.
When you look back, say, to the start of the year and you look at market performance, I mean, what's your sense of the kind of rally that we saw? Do you see like a kind of a trend line for that, or was it just a once-off? How are you looking at things?
So that rally was very interesting. And I think what it was basically telling us was people were confident that central banks had inflation under control, that inflation was coming down, that we'd seen the peak of the inflationary cycle and the interest rate cycle that the peak in the interest rate cycle was going to be reached pretty shortly. And then you'd have a very short period of time to wait before cuts started to come. And you saw even the JSU was up just under 10% for that month of January. But once February came in, and then we saw the more bullish jobs numbers in the US, it became clear to the markets that, no, the peak in the interest rate cycle hasn't quite reached. And in all likelihood, we may actually go past that 5% level in the US. And I think that's what's driving this bearishness. And I mean, it's just common sense that for so long as interest rates are rising and you can't see the peak, equity markets can't be doing well, and equity markets tend to sell off in such an environment. So I would say there's no trend line there. It started going sideways to coming down. That's probably the direction that you're going to see until it's clearer what's happening with the inflation side and what's happening with the interest rates.
With that context that you've just described for us, how important does next week's US CPI figure become?
It's very critical. It's absolutely critical. If you see a significant drop in that, it means at least it's going in the right direction, and it gives Powell something else to think about. Because remember, the collision that we're looking at here is one of slowing economy and inflation falling, but the inflation is falling because interest rates are rising. Now, those interest rates could reach a point where they accelerate the decline in the economy and you fall into a recession. And then it's that much harder to re-stimulate the economy. So it's a very fine line these central banks are treading. And it will be interesting to see their reaction when you see that inflation print. If that print is not substantially lower, if it's in line or if it's pretty much what we saw previously, you can be assured for the rest of the year we've got interest rates climbing up, and the peak is not something that's particularly clear.
Speaking of the rest of the year, say the next 3 to 6 months, what are the risks for you that would, let's call it the canary in the markets, in the mine?
Look, it's always geopolitics. Who knows what happens with the Ukraine war? It could escalate, or you could find a solution, or you could see something that makes things clearer there. This whole balloon issue, the China-US balloon issue, I don't know how significant that is, but the reaction so far tells you that that story is not yet over. And then China, the China reopening story, is it quite over yet? Are they going to stimulate the economy a little bit more? And like you mentioned, there's not much inflation there, so they're not exporting inflation. Maybe the demand could be stronger. Maybe that's what supports markets. So to me, those are the three things, geopolitics being the most critical and the one that turns markets on a dime.
Roy, thank you so much for your time. That is Roy Mutuni, who is a portfolio manager at Sanlam Investments. And as we mentioned, Tuesday we have an all-important US CPI data coming out, as well as speeches coming out from the various Fed president. We'll also be looking at US retail figures for January, unpacking the state of the US economy. But we'll unpack all of that for you next week as we look forward to that figure. We're going to take a break now. When we come back, we'll have SME on point, so stay tuned.